In this video, I'm going to talk about the double declining method, and it is a much faster way of depreciating a piece of equipment than, say, the straight line method. Now, you say, well, why would we want to depreciate a piece of equipment faster than what would be normally considered appropriate? Well, the thing is, it's for tax purposes. If you start depreciating your assets faster, you pay less taxes because you don't have as much value in your company. Now, this could backfire if you're trying to show profitability in your company, because if you're trying to show that your company is strong, you wouldn't want to use this. But if you're trying to avoid the tax man, this is a perfect way to do it. Let's start with our $2,000 computer, which I talked about in the straight line method. Once again, we're going to subtract $500 for salvage value, and we're going to have a total of $1,500 left over. Okay? This is what we're going to depreciate. Now then, we have $1,500. We're going to divide it by 3 years because we're going to depreciate this asset for 3 years. And so we're going to depreciate it. In the straight line method, we would have depreciated it $500 a year. However, that's not how we're going to do it this time. We're going to take that $500, we're going to divide it by $1,500, and we're going to say in the straight line method we would have depreciated 33%. Okay? But in this case, we're going to take that 33%, we're going to take it times 2, and therefore we're going to have 66% depreciation. Now, how does this all work? Okay, we start out with $2,000. We're going to take it times 66%, and that's going to leave us with a balance of $1,320. We subtract the $1,320 from the $2,000, and now our asset's worth only about $680. All right. The second year, we take the $680 times 66%, and we get a total of $448. Well, that $448 is more than what we want to depreciate because we still got a salvage value on this computer. So instead of subtracting $448, we're going to have $680 minus $180, which gets us $500. Because if you have $680 and you subtract $500 from it, you're going to have a residual value of $180. Now that $180 is what we're going to remove from $680 to finish its depreciation to $500. Okay? So we're saying our computer in the second year is worth $680. We know its salvage value is $500. Well, $680 minus $500 is $180. So we're going to depreciate our $680 computer by $180, and that will give us our salvage value of $500. And we just don't do anything in the third year because it's all been depreciated and gone. Now, you may still be using the computer at this point, but it's been properly depreciated. Alright, I will tell you more in a future video, so stay tuned.